We've got questions now. So Nagesh Burugu from Hyderabad is written with a question on Kotak Mahindra Bank. He's been holding 200 shares of the bank at 1200 a piece for the last 8 months. Wants to know if he should hold or sell. Mayuresh, what would you tell him?
Afternoon, Prashant. I think looking at numbers, I'm not overly perturbed because the loan growth has been quite strong at 24% odd. And even if you look at the overall asset quality picture, the asset quality has remained very, very stable. So going ahead, again, the expectations of loan growth staying between that 21-22% as a base case, when you're talking about deposits growth, expected to be around that 20% odd mark, will ensure that the kind of pressures that one's seeing, as Abhishek pointed out, specifically in terms of the interest curve moving up, I think the pass-through in terms of select products, in terms of the lending yields, would to a certain extent offset the kind of input pressures that we'll see from the cost curve. But a large element in terms of valuations, they are obviously on the higher side. And the subsidiaries are contributing as well. So Kotak Prime, Kotak Securities have put on a good show. So again, if the investor has a longer term view, I think he can very well hold on to the stock.
All right. Thanks a lot for that. Mayuresh, let's get to Mayuresh, Bajaj Finance, a good time to buy now or wait and buy like Mitesh says?
I would agree with Mitesh, Lata. So I think if that correction comes through, whenever it comes, I think that patience has to be kept. The other element, Lata, is that the loan growth has remained a little bit soft this time around as per market expectations. But the management I was hearing on your channel, I think, is still putting out a 25% growth. Our own assumptions are assuming a 30% kind of a growth in terms of both AUM and advances, which should reflect very, very positively in terms of its earnings growth as well. Now, asset quality has remained impeccable, so at 1.39 GNPAs, 0.44 net NPAs, and the granularity of the breakup that you probably see in terms of its AUM as well. The B2C consumer durable business growing at a fast clip. Rural financing, again on a small base, has grown significantly higher. And again, the cost of funds, which we're again time and again pointing out, as in the case of Kotak, might have an impact, and that would impact margins to a certain bit. But a large element in terms of this earnings momentum can very well continue in terms of the premium valuation that the stock derives. So I think, as Mitesh said, wait for those levels if they come through. I think that would become a starting point.
All right.
Mayuresh?
So with the assumption that he's bought at 135 and assuming that he has a long-term view, I think purely going on valuations at this point of time, Hindalco is probably trading at a very cheap level. So I think at 5.6 times EV/EBITDA on an FY19 basis, it's around 20% discount to its 5-year median. Now, even if one assumes it's Novelis operations, the other downstream operations which are comparable to Novelis and much smaller size are commanding EV/EBITDA of more than 7.5 times. So the assumptions of the Novelis operations actually ramping up as we've seen in the past, and the assumptions of its standalone business actually able to gather steam amidst all the turmoil that you've probably seen in terms of fall and realizations in aluminium prices and increase in alumina prices. I think the longer term outlook still remains very, very robust. Apart from the acquisition that Nisha probably spoke about, I think the debt levels, if it does go through, can go up, but it might be a short term impact. So if it's a longer term view, I think hold on to this.
Rohit Agarwal from Uttar Pradesh has written in with a question on Mindtree. He's been holding 225 shares of Mindtree. His cost is 676 a piece. And he's been holding them for the last 6 months. He's a medium-term investor and wants to know if he should hold or sell. Mayuresh, what's your sense on Mindtree?
No, so to a certain bit, Prashant, I think the results did disappoint, but I'm not overly perturbed because I think the dollar growth was quite strong at 6.9% odd on a quarter-on-quarter basis. Here's the client dependency is pretty strong, and that risk probably runs through. But what we've probably seen in terms of the margin compression as well, I think it was more to do with a lot of front loading of the wage hikes that probably took place, and the investments that the company has done, specifically in the new ventures that it is planning. So I think the digital investments are going to bear fruit. What you're probably talking about in terms of the earnings perspective, both in terms of dollar revenues and the constant currency, I think it is expected to grow at a very fast clip, and margins should normalize over the next few quarters. So I think if the investor has a long-term view and looking at his acquisition price, he can very well hold on to the stock. And out of the large cap names, I think HCL Tech is an alternate choice that will continue to like on.
Mayuresh, HDI?
No, again, as Mitesh rightly pointed out, I think he has to look at alternate stocks. So I think something like a Diwan housing, which we have been liking for a period of time, I think there is still juice left in the stock, both in terms of a solid double-digit growth that can come through in terms of the AUM and advances. NIMs expected to remain around the 3% mark. And there is a huge scope in terms of the affordable housing. And again, I think the meeting that will happen today, I think, and the push through from the government side is going to be beneficial for a lot of these housing finance companies. So though the cost curve might again take a hit in terms of their NIMs and spreads, I think there will be an element of pass-through which will protect their margins as well. So I think Diwan housing is an alternate suggestion that I can make for the investor.
All right. Mitesh and Mayuresh, thank you very much for joining us and answering questions of our viewers. That's it on this edition of Markets Today Talk Back. Thanks for watching.